Welcome everyone to one of Planning's Webcast series webinars. Today we'll be hearing about flood insurance and floodplain management planning. My name is Elizabeth Bueller and I'll be your moderator for this session. For help during the webcast, please type a question in the question box or go to the GoToWebinar menu or call 1-800-263-6317 for tech support. We want to thank all of our 2014 sponsors. Without these chapters and divisions, we couldn't present these webinars to you. Today's webinar is presented by the Nebraska Chapter. You can learn more about all our chapters at planning.org/chapters and about all the divisions at planning.org/divisions. We have a lot of great upcoming webcasts. Please check out our schedule at utah-apa.org/webcast to learn more. To log in your CM credits today, please visit your dashboard at planning.org, select Activities by Provider, then go to the Nebraska Chapter and select Flood Insurance. The number for today's session is E.28414. Also, remember to like us on Facebook. We have our own page, Planning Webcast Series, so you can receive up-to-the-date information on Planning Webcast Series sponsored by our other chapters and divisions. Also, if you'd like to view videos and PDFs of past webcasts, please visit youtube.com/planningwebcast. Now I'd like to present today's speakers. Our first speaker today is Mitch Payne. Mitch is the Flood Mitigation Planning Coordinator for the Nebraska Department of Natural Resources. Our second presenter is Shandy Telschik. She is Natural Hazards Program Specialist for the Federal Emergency Management Agency in Region 7. I'll now turn it over to Mitch.
Great, thanks. Thanks for having us. Go. That up now?
Yes, you are set to go, Mitch.
Okay, great. Thank you. So thanks everyone for tuning in. Like Elizabeth said, I'm Mitch Payne. I am the Flood Mitigation Planning Coordinator for the Nebraska Department of Natural Resources. And essentially what I do is I work with communities all across the state of Nebraska and help them understand what the rules and responsibilities are in terms of floodplain management and how they can go about doing things to mitigate their risk from flooding, whether they're in a community with a small creek going through it or they're a community on the Platte or Missouri River here in the state. And throughout my time here, I've worked a lot with various departments. I am a planner by training, and so I think I have a unique perspective on how we can better incorporate floodplain management in some of the more traditional planning roles. And I think that the information that myself and Shandy will provide today, I think will really help planners understand how they can tie a little bit of their activities into floodplain management and what they can do to help their communities deal with this particular risk. So going forward, you know, floods are the #1 natural disaster in the United States. They kill more people and do more property damage every year. And a unique thing about flooding is that, for the most part, we can predict what is going to happen when it floods, and we have a map to show you. And yet they still do affect people's lives every year, far more than tornadoes or earthquakes or hurricanes. And so we have this National Flood Insurance Program that essentially is the U.S.'s solution to dealing with flood risk and helping communities better manage their development to make them safe and to keep their communities safe. And in this National Flood Insurance Program, which is done by FEMA, there are 4 particular elements that go into helping communities identify and manage their flood risk. And by doing all of that, then FEMA provides flood insurance so that homeowners and business owners and other building owners can make sure that they are covered in the event of a flood event. And then lastly, FEMA, through the National Flood Insurance Program, provides grants to go above and beyond those basic requirements in floodplain management to help people stay safe, even though they may not be most at risk. So anyways, we're going to go through at least the first three today to talk just very briefly about flood risk mapping, to talk a little bit more in detail about floodplain management, because that's where planners, I think, have a role to play, and then talk about flood insurance so that planners have a good...
The broadcast is now starting. All attendees are in listen-only mode.
Have a good understanding of what business or a property owner has in terms of flood insurance. So flood risk mapping, or floodplain mapping, there's lots of words for it, is based on a series of technical data and technical requirements that FEMA puts out that uses engineering methods to create maps. And essentially what happens is you start with a base map that includes elements like buildings and streets and parks and open areas, and then you add a layer of topography on it, elevation data that comes from the topographical maps or LIDAR, which some of you may be familiar with. And then imposed on that are a couple different engineering modeling techniques that predict and model the amount of water that flows through a stream or a floodplain and predicts the behavior of that water as it flows through the area. And then using those engineering and other techniques, then they come up with this digital flood insurance rate maps. And these are called, you'll hear us talk about floodplain maps or firms, and we'll get back to that a little bit later. And these are the official regulatory products that communities have to use in their floodplain management. And this essentially shows what happens in a 100-year or a 1% annual chance flood event. This shows where the flood is going to be. And again, it's based on, a lot of people say, well, it's never flooded here, so I don't have to worry about it. But they really do. This is reality. This is not, this isn't made up. These are accurate models that show where a flood is going to happen. And then based on those, communities have the responsibility to manage development in these floodplains that are on the map, and to regulate development here. And for the folks in local government out there, someone, if it's not your department, someone else in your local government is the one that is actually managing this development. And I think it's really important that planners, whether they're working on long-range plans or more of the development review side, I think it's really important that planners understand what goes on in floodplain management, because it really does affect everything the community does and everything, all aspects of how a community grows or develops. So to take a little bit of a step back, communities have to elect to participate in the National Flood Insurance Program. And communities do that by agreeing to manage development in the floodplains and adopting an ordinance. And when they do that, then federal flood insurance is available to structure owners in the community. And so they participate largely because flood insurance is required by a building owner to obtain a federally backed mortgage. If they don't have flood insurance, the bank cannot lend to them. And so an individual can only receive flood insurance if their community as a whole participates and stays in good standing with the National Flood Insurance Program. So this is one big incentive for communities to participate. And this is actually unique in the world. The U.S. is the only place that does it this way. Most other countries have flood insurance provided in sort of a bulk or individual insurance coverage through homeowners or building insurance coverage. But the U.S. is unique in the way that we tie it back to an incentive-based program, and it's provided by the federal government itself. Another reason why communities participate is that there could be implications for the availability of disaster assistance if there is a flood map that covers the community. And if the community doesn't participate, they may have limited access to the disaster funds. And at the end of the day, everything to do with floodplain management just reduces the loss of life and property due to flooding. That's what this is all about. The safer we have our buildings and the safer we have our people, the more resilient our communities are going to be. And so everything in floodplain management comes from the Title 44 in the Code of Federal Regulations. If you want to sleep at night, I recommend picking this up. And this is where everything can be found to do with floodplain management. And then in many states, they have their own separate state statutes or state regulations that deal with floodplain management. Here's an example of the Nebraska statutes. And we actually, uniquely, Nebraska had our floodplain management statutes in place before the federal ones. So even if the federal regulations go away, communities in Nebraska still have to manage their development in floodplains. And then a lot of states will provide a sample ordinance or some sort of minimum standards that would go into an ordinance for communities. And this is an example, again, of Nebraska's minimum standards. And so once you have these things in place, there are sort of a tiered level of regulations that have to be put in place based on the level of flood risk that is identified in a community. And these sort of reference the elements of the CFR that relate to the regulations that have to be in place. But for example, I think what's really important here is if you're in a community or working in a community that doesn't have a flood insurance rate map, they can still join the National Flood Insurance Program. It's still good to do so. And they have to make sure that development in their community is reasonably safe from flooding. I mean, if it's not mapped, if there's not a floodplain map, but there's a stream in the community, pretty evident that there may be flooding around that stream. And then taking a step up, there's when a community has a flood insurance rate map, there are various flood elevations that are determined or not determined in the creation of that map. And if there are no flood elevations determined, that's 60.3b, then a community can still participate, and they have to regulate development in a little different way. And then the more detailed the flood maps are as you go up this ladder, the more a community has in their power to regulate that development. So really everything in floodplain management is pretty black and white, but there is a lot of gray areas. And that's why we have state entities like myself or like the Department of Natural Resources here. We help communities really understand those gray areas. And in many other states, there are similar departments and similar agencies that do that. And so it's wise to check that out. And so I think what's really important is to help planners understand some of the big concepts in floodplain management, and that will help them really see where they can fit their activities into what the rest of the local communities do. And so I think that the first piece is really the definition of development. Floodplain management means regulating development in floodplains and anywhere in your community, and development is really just about everything you can think of. It's buildings, it's mining, it's filling, it's grading, it's storage of materials. Whatever it is needs to have some sort of floodplain development permit. And that's the crux of everything we do in floodplain management is permitting the development, any kind of development in the floodplains. And that's what local communities have the responsibility to do as they participate in the National Flood Insurance Program. And so these are some of the typical scenarios where we see floodplain development permits required, whether it's a new residential structure, any additions or improvements to existing structures requires this, repair due to damage from natural hazards or fire, any kind of fill added or public facilities improvements too. And a lot of times these, in a lot of communities, these are tied to building permits or zoning permits. But even in communities that don't have these, a lot of our small towns in Nebraska don't have building permits or zoning codes. And if they participate in the National Flood Insurance Program, they still need to regulate and permit development. And so they do that through a variety of means. And if anyone has questions about that, we can maybe answer those in the Q&A session. So again, a lot about floodplain management is technical. And there are some other definitions that we should think of as we move forward in the presentation. A flood, by FEMA's definition for the flood insurance program, is surface water that affects a building on normally dry land areas. It does not mean groundwater, and it, in some cases, does not mean rain that comes in through a hole in your roof. And a floodplain is any land susceptible to being inundated, and these are what are shown on the map. They may not be really anywhere near what someone would think of as a creek or a shoreline. A floodplain may extend very far into a community, and some people may say, well, I don't understand why there's a floodplain here, but it's shown on the map. And the SFHA is a special flood hazard area. This is our technical term for floodplain, but you'll see that a lot if you delve into floodplain management. And then SFHA is designated by various flood zones. And I've listed the A's here, but in coastal areas they are called the V zones. And then outside of the 1% annual chance, there are X zones. And then lastly, there's a piece of a floodplain called the floodway. And you can see that here in this diagram. The floodway is the part of the floodplain that's mapped. And if everything else was developed in that flood fringe area, the floodway would be able to carry the entire 1% annual chance flood. And the other important definition in floodplain management is this base flood elevation. And this is the level of a flood, the height of the flood in a 100-year event. And this is what development is based on and the regulations are based on. We'll come back to that here in a couple slides. At the end of the day, these are some of the certificates and permits that communities deal with. Everything has to have a floodplain development permit. In some cases and in some scenarios, they'll need engineering certificates, and in some cases, they'll need elevation certificates. And if it's development in a floodway, in certain places, no-rise certificates are required. And again, for floodplain management, structures are defined as walled and roofed buildings. And for flood insurance, which is a little different, a structure is considered 2 rigid walls and a roof. And in general, there really are 2 main types of structures, residential and non-residential, as well as a pertinent, although that gets a little into the weeds. But there is no necessarily definition of commercial or public facilities. Everything is residential or non-residential for floodplain management. And in Nebraska, we have higher standards than the minimum, but we require any residential structure to have their lowest floor, including the basement, elevated to at least 1 foot above that 100-year flood level, the base flood elevation. And this is really the key thing that I think communities need to make their other staffs aware of, is that this lowest floor is the deciding factor on the development of any particular residential structure. And then for non-residential structures, again, this is in Nebraska, you should check in your own states. They have to be elevated or dry flood-proofed to at least 1 foot above the base flood elevation. And dry flood-proofing is a technique to keep the water out of a building. Again, that's going into the weeds. And often we have building sites that are too low or a structure that needs to come into compliance with that 1 foot above base flood elevation. And there are various ways that we go about helping individual property owners do that. On a residential structure, in some communities, you can add fill to a site to elevate it above the base flood elevation. In some communities, you can't. That's something that you really need to check on in your own communities. And then obviously adding foundation elements, like adding more blocks to the foundation or adding piers or something can certainly elevate a structure to above the base flood elevation. And on non-residential structures, you can also engineer flood-proofing measures, but this requires an engineering certificate. These are just some examples of where you can elevate a structure on fill here. This may not be the best example because they still have their propane tank well below the 100-year flood level. which they should definitely elevate as well. This is an example of a crawl space that has vents there you see on the bottom of the structure, and those allow floodwaters to enter the building. Again, this is getting into the gray area and the weeds here, but this is an example of elevating a structure. This is an example of a structure on piers. You might not think of Nebraska as having too many structures on stilts, but we certainly do. This is a National Guard camp building. It's located right on the banks of a river, and they definitely need their building to be elevated on piers here. And in some cases, it's not, you can't elevate the entire building. You can flood-proof it, but it's still a good idea to elevate the utilities. And here's an example of that. And in a case where the map, the floodplain map might not truly reflect the local conditions, there's a couple ways that that a community or an individual could go about changing the map itself. For an individual property, they can get a letter of map amendment, which essentially acknowledges that for that one particular house, they're vertically out of the floodplain. They're elevated up above, but on the map it looks like they're in the floodplain. And this is typically done for one or two structures. And then there's the letter of map revision based on fill, which essentially says that a building is elevated. There's been fill brought in above the natural ground, and that will elevate a structure up and above. This form and this letter of map change does require community acknowledgement, and some communities decide not to sign these because fill essentially just pushes water away from that area that it could go otherwise. So be sure to check in your own communities. And then for a broad map revision or a broad change to the map, communities or individuals or developers can do a letter of map revision, which changes the entire flood map. And again, people have questions on that. We can answer those later on. And so floodplain management applies for any development, but in particular on structures, new construction, substantial improvement, any substantially damaged buildings or any other development has to have floodplain management rules and responsibilities applied. Stepping back a little bit, I think this is outside of the purview of the National Flood Insurance Program, but as a planner, I think it's really good for planners to understand how floodplain management could factor into long-range planning. And I think at the end of the day, floodplain management really does give planners good tools to use when they think long-term. We give flood maps. The flood maps are there. They're available to anyone, and they show where the true flood risk is. And I think it's our responsibility as planners to pull this out, to put this in our long-range plans, and to really show people that the best practice is just to not develop in a floodplain. Some communities don't have a choice, whether it's located on the coast, or some communities are located entirely in a floodplain, and they might not have known that in the mid-1800s when they developed there. But for new growth areas, it comes down to the simple fact of just don't develop in the floodplain. They're risky areas, development's more expensive, and it really does disrupt people's lives when a flood does occur. And it's not if, it is when a flood occurs. And I think when planners focus on flood risk in long-range planning, they really can use that opportunity to help a community grow in a different direction, which really is cheaper in the long run. It creates more resilient communities, neighborhoods, and homes. And I think comprehensive plans are obviously good places to do that. Comprehensive plan looks at your community as it exists now. In streams and rivers, there are permanent aspects. You can't remove them. You can maybe change them, but they are permanent aspects, and the floodplains that come along with them are also permanent. And comprehensive plans are good places to discuss this and to have a community conversation about it. They really should account for floodplains and for the flood risk that is apparent in communities. And good floodplain management really does require a long-term strategy. Typically, we deal with individual homes, individual businesses when we do the permitting day-to-day. But I think if a community wants to be truly resilient, it does require a long-term strategy. I think at the end of the day, any community that has a floodplain can see it as a limitation, or they can see it as an opportunity. an example from the Missouri River flooding in 2011 in South Sioux City in northeast Nebraska. This area that you see, this is looking east of the road there. You can see the homes or the apartment buildings at the bottom are protected from the floods by being set back. And you have some open areas. You've got the baseball diamonds, and you can't really see it, but there's a kind of an RV park that's up there a little closer to the river. And these can be evacuated. These can be cleaned up very quickly and very cheaply once these flood waters recede. So this is really where South Sioux City chose to see their floodplains as an opportunity. They put some recreation areas in here that might be disrupted for a few weeks at a time, but you know, essentially assure that homes and businesses aren't damaged when they when it does flood. So I think that's the message that I leave with you planners, is that it's really an opportunity. Floodplains can be an opportunity in your community. And so now I'm going to turn it over to Shandy to talk to us about flood insurance. I think we're good to go. Shandy, take it away.
All right. Hi, everyone. I'm just going to expand my screen here. There we go. Oops. Would help to start at the beginning here. Can I just get a quick confirmation that my screen is showing?
It is.
Great. Thank you, Elizabeth. So as Mitch said, I'm going to focus this last part of our presentation on flood insurance. My name is Shandy Telshik. I am currently a Natural Hazards Program Specialist with FEMA Region 7, which is located in the Kansas City office. And I specifically focus on the National Flood Insurance Program and work with communities that participate in the program and communities that would like to participate in the program, providing technical assistance on the various aspects of the NFIP. And specifically, I work with the state of Nebraska and work with Mitch quite a bit. So I'll just reiterate something that Mitch said, which is basically summarizing the National Flood Insurance Program, or NFIP for short. It is a federal program. It was established through the passing of the National Flood Insurance Act of 1968. And basically, it's a voluntary program that's based on an agreement between local communities and the federal government. Those local communities agree to adopt at least minimum floodplain management standards, and in the cases where states have higher standards, they also adopt those higher state standards in exchange for the federal government to offer federally underwritten flood insurance. So it's definitely an exchange program. It is voluntary, and I know we have a national audience on the line, so just to give you guys an idea, we currently have approximately a little over 20,000 communities across the nation that participate in the program. In addition to that, we do have about 2,000 communities that have some sort of risk identified, but for one reason or another they've chosen not to participate. So again, illustrating that voluntary nature of the program, but we are happy to see that over 20,000 communities participate and have adopted floodplain management standards in their communities. So I have a little question to pose for folks. Which one is more likely to affect you, a fire or a flood? So it's a National Flood Insurance Program presentation, so it's a bit of a trick question. But during a 30-year mortgage for a home that's in the floodplain, the high-risk floodplain or that special flood hazard area that Mitch described, there's a 10% chance that a home will burn. However, because that home rests in the 100-year floodplain, there's a 26% chance that it will flood during a 30-year mortgage. So I'm always, even though I've been in this program for 10 years, that statistic always, it keeps my eyes open, I guess I should say. Now, flood insurance. Just to give you guys some broad information about that. Typically, flood is not covered under most homeowners policies. I know a lot of insurance companies have really tried to outreach and educate their policyholders that their homeowners policies, their general insurance policies that they have on their homes or businesses, which is typically someone's biggest life investment, that this peril of flood is not covered. And for those of you who own your own homes or own buildings, you may take a look at your own insurance policy, and I can pretty much guarantee there's going to be a note somewhere on there that specifies that the flood peril is not covered. Also, just want to reiterate that that insurance is available to anyone in a community that participates in the National Flood Insurance Program, whether they're in the mapped special flood hazard area or the floodplain, or they're not. This is the great thing about flood insurance, is that it really is available to everyone, every property owner, whether they live in a high-risk area or not, so they can get covered, because floods don't always go where we map them, and not every flood is a 100-year flood. There is flash flooding conditions. There are lower frequency events that could potentially hit people that are not in the mapped floodplain. The coverage comes in a couple of different formats. People can purchase building coverage, they can purchase contents coverage, or they can purchase both. This is great for those renters out there. For instance, I'm a home renter right now, and if I live near a water source, and so I can purchase contents coverage only, which can cover all my belongings. We also have a part of the flood insurance policy that's called increased cost of compliance coverage. It's an automatic coverage that comes with every single policy that's written, and what this is it's an additional $30,000 that a property owner could potentially tap into if they have a substantially damaged structure that is damaged due to flood that needs to be brought into compliance with current floodplain management standards. This is particularly helpful for those structures that were built many, many years ago, perhaps prior to the first flood insurance rate map being published, or if the flood risk has increased in a community and the structure was built according to a different flood elevation. This is something that property owners can tap into to give them some financial help to meet the current requirements. And I just want to cover too here what substantial damage is. We hear this term a lot, and you may have too, in the aftermath of disasters. Think Superstorm Sandy. Here in Nebraska, we had recent tornadoes of our own. Just I think every state has been experiencing some sort of damaging events. And substantial damage is a special term in floodplain management where the damage that a structure experiences is equal to 50% or more of the current market value of that structure. A community is responsible for determining if damaged structures in their communities hit that 50% threshold and then are determined to be substantially damaged. And if so, if they are currently not in compliance with the current floodplain management standards, they will be declared substantially damaged and must then meet the current requirements. So hopefully that all made sense. I'll move on. So insurable by the NFIP. We get a lot of questions when we're out talking with communities, especially after those floods, about what does flood insurance actually cover. A lot of questions about croplands here in the Midwest, and the National Flood Insurance really only covers damage to structures. We're looking at walled and roof structures, principally above ground, manufactured homes or travel trailers. If they're anchored on a permanent foundation, we're going to cover those contents of those structures. And we'll also cover buildings that are in the course of construction as well. I'll just make a quick note on the walled-in roof structures principally above ground item. There was a change, it was many years ago, it's been in effect for quite some time now, but structures that are over water, 100% over water, the NFIP no longer covers those structures. Again, that's been in place for some time, but in case there was a question about that. Now, another thing we definitely want to cover when we talk about flood insurance is what goes into establishing a premium for a structure and how much premium a person will pay for this flood coverage for their home. I would say the two most important things that come into play are the flood zone and then the lowest floor elevation compared to the base flood elevation for that structure. The flood zone, that's going to be, as Mitch described, basically, is that structure in the high-risk floodplain or the low-risk floodplain? The high-risk floodplains are those zones that begin with A or V, like in for velocity zones along the coast. Or is it in a low-risk floodplain? And those zones starts with C, B, or X. So the higher risk flood zones, as you can imagine, are going to cost more than those low risk zones. Also, I'm going to skip one here on my bullet point because I think the lowest floor elevation compared to the base elevation is going to be the next most important factor used for rating. So when a structure is built, that lowest floor, including a basement or crawl space floor, will be compared to the base flood elevation. And there's an indirect relationship here between that lowest floor compared to the base flood elevation and how much premium will be charged. So basically, the higher the lowest floor is compared to the base flood elevation, the cheaper the flood insurance rate will be. I'll go into this in a little bit more detail in the next couple of slides. Other factors that come into play are the amount of insurance and deductible. For residential structures, there's a $250,000 maximum for structures, and for non-residential, there's a $500,000 insurance max. There's a couple of different options for deductibles, and then Congress in their latest legislative reform have actually introduced a new high deductible option that is intended to help lower the premiums even more for folks who are living in the special flood hazard area. Other things that come into play: building type, that's the residential or non-residential. Foundation, is the structure slab on grade? Does it have a basement? How many stories is it? These are, again, other questions. And then the age of the structure as well. And most of the time, what we're looking for here is whether the structure is pre-firm or post-firm. You heard Mitch describe the flood maps that FEMA publishes called the Flood Insurance Rate Map, or FIRM for short. Whenever a community will receive what's called an initial flood insurance rate map, and that's a really important date for that community because it establishes pre- and post-firm structures. So anything built before the first flood insurance rate map was published is going to be a pre-firm structure. Anything built after that flood insurance rate map is published becomes post-firm. It's very interesting. In the flood insurance manual, there's many tables, and so as we answer all these different questions, that pushes the underwriters to the different tables to determine what will be the actual premium for that structure. I think I'll just make the note here too that a big question we get when we talk with residents and business owners and communities is everyone wants to know, well, how much is insurance? How much will it cost? And it's because of these items and these different factors, you can have two structures in the same neighborhood right next door to each other. One has a basement, one doesn't. They can have drastically different premiums. So it's really hard to answer that question with any specificity for those folks. We try our best, but hopefully all of you on the phone have a better idea of why it's so hard for us to give such specifics when we get that question out in the field. So here I just wanted to just illustrate a bit more on that elevation of lowest floor compared to the base flood elevation, and give you an idea in dollars wise. Please note that the dollar amounts on these charts will be off. This chart's a few years old and the rates have changed since then. But just to give you an idea, and maybe hopefully you can see my pointer here too, is so a structure that's built below base flood elevation, it's 2 feet below. It's looking over the course of a 30-year mortgage. It's a high flood risk, it's a structure built in a high flood risk area. It's post-firm, so technically it should be built at least to the base flood elevation or whatever the community requirement is. It's single family, no basement, 1 story, $100,000 of building coverage. So we're looking at this structure was built 2 feet below base flood elevation. So over the course of 30 years, this person is looking at paying almost $100,000 in flood insurance, whereas the person who built 2 feet above is looking at paying over the course of 30 years a fraction of that. I have another way to illustrate this. This illustration was put together as a result of some legislation that was passed in 2012, and I'll be touching on that here shortly. But again, illustrating the difference that following floodplain management and elevating structures can really make for the individual for their insurance premiums. So here on the left, we'll start with, we look down here, we have all our little caveats for our insurance. We have $250,000 building coverage. It's in a high-risk zone, single-family, 1-story structure, no basement. This structure here, 4 feet below the base flood elevation. Again, over a 10-year period, because it is 4 feet below, we're looking at $9,500 a year, $95,000 over 10 years. We are built at the base flood elevation in this second example. And again, we're looking at $1,400 a year, $14,000 over 10 years. We see significant savings when that same structure is built 3 feet above the base flood elevation, with dropping their premiums to $427 per year. Now, a lot of people, when we talk with them about potential mitigation of a particular structure, they might balk at the cost of elevating, because there is the fees and there is the construction cost. But when we describe what their scenario could look like for them over long term, we like to tell folks, take this $95,000 and invest it in yourself, invest it in your home, and you become more resilient. Your home is more resilient, and because these individuals they help make their community more resilient as well. So really the bottom line here is that all these different aspects of the National Flood Insurance Program really do work together. Everything on the floodplain management side directly or indirectly affects flood insurance rates. When high-risk areas are identified, revising those maps, when communities want to do any kind of flood risk reduction projects, we always encourage them, make sure you budget for that potential map change, because if there's decreased risk in the community, we definitely want the maps to show that decreased risk as well. And then the as-constructed elevation certificates, these are documents that communities can use to document that the structures that they are permitting in their community are in compliance with the floodplain management regulations. These are also a huge important tool for flood insurance agents, because the agent really has no other way to know anything about the structure that they're insuring, especially in the from the flood side of of what they're looking at. So these elevation certificates, if you've never seen one, it's a FEMA form. It contains information about the location of the structure, address, property owner name, community information, base flood elevation of the structure's location. It has various elevation information such as lowest floor, next higher floor, the elevation of the mechanical and utilities, and electrical connections. There's also lowest adjacent grade, highest adjacent grade elevations on the exterior of the structure. These are all important elevation notes that go into the insurance agent's software so that the structure can be accurately rated. And also elevation and flood insurance cost. Hopefully you've taken away that elevation is a good thing, and it goes hand in hand with those floodplain management requirements. It can and definitely helps out the individuals with their flood insurance cost. Now I did want to touch some on the legislative reform that's happened in the last few years. In July of 2012, Congress passed what was called the Biggert-Waters Flood Insurance Reform Act of 2012, and the whole point of this, I know it's no secret to probably anyone on this call, is that the National Flood Insurance Program is quite a bit in debt, and in recognition of that, Congress basically, with the passing of this Biggert-Waters Flood Insurance Reform Act, wanted to move the National Flood Insurance Program to a more actuarial-based premium rating structure. To give you a little bit of background on that, I described those pre-firm and post-firm structures. Well, pre-firm structures were moved into a subsidized flood insurance category because mainly because those structures were built before any flood risk information was known, and so they were really given a break on the insurance side of things. Now, BW-12 really pretty much removed the subsidies for those pre-firm structures. So what we found across the country is that many people who owned these pre-firm structures were really getting hit hard on the flood insurance side, and their premiums increasing drastically. I'll cover just a little bit on that, a little bit more on that in just a moment. Also with BW-12, there was the establishment of the Technical Mapping Advisory Council. This council was going to be an independent, is intended to be an independent advising group of folks, of specialists, to advise FEMA on how to meet congressional intent on its mapping program. If anyone's interested in learning more about where this group is at right now, you can go to www.fema.gov and put in the search engine TMAC, T-M-A-C, and it'll pop up the Technical Mapping Advisory Council page. And on that page, you'll find links to the short biographies of the council members. There's different representation from across the nation and different agencies, local, state, and federal. Also, you'll find agendas. They just met in person at the end of September. Beginning of October was their first in-person meeting to establish their duties and reporting and basically establish the framework for what they wanted to accomplish. Also, BW-12 set forth a requirement for FEMA to complete an affordability study. I want to go back to that, to the subsidies for the pre-firm structures. Because flood insurance is categorized for both residential and non-residential, the removal of the subsidies for pre-firm structures was a removal for both. Removal of the subsidy for both. And so again, what this did is it basically removed any kind of discount these pre-firm structures were seeing. And so we saw structures that because they were built before any flood risk information was published, we see structures that are built 5 feet below the base flood elevation, 8, 10 feet below the base flood elevation. And if you can just think back to that elevation cost, one of those two charts, you can see if those structures are actuarially rated, their premiums skyrocket. And many folks were experiencing that they were paying way more for their flood insurance than they may have been paying for their mortgage to begin with. So there was quite a lot of media attention on this, and there was a lot of folks calling their congressional representation regarding this topic. And so in March of this year, Congress passed the Homeowner Flood Insurance Affordability Act. And what it did is it stopped the rate increases for certain subsidized structures. Now I do want to bring your attention to the name of the act. It's the Homeowner Flood Insurance Affordability Act. A lot of folks across the nation thought that this act, HFIAA, basically reversed everything about BW-12, and that really couldn't be further from the truth. Those pre-firm non-residential structures are still seeing the removal of their subsidies, and they're still seeing those dramatic increases in premiums to reflect what their risk is. Now, what did stop was the rate increases for homeowners. So for those residential structures, it didn't completely stop their increases, but it stopped the rate at which those would increase. So those folks will still see premium increases, but it will be over a much longer period of time. So hopefully that will help in their financial planning and budgeting for flood insurance, and they'll still be able to see some relief from this new congressional act. Also, it provided refunds for those people who saw drastic increases because of BW-12. HFIAA actually had a clause in it to get those people some of their money back. And so that is starting this month, and so people should start getting their refund checks if they're expecting anything. Also, HFIAA took the affordability study and took it a step forward and is requiring FEMA to provide an affordability framework that will be influenced by the affordability study. At this time, we don't really know what that framework will look like. The affordability study is still being contracted, so I hope to learn more about that in the next year or so. I wanted to cover a few of the resources that we in the floodplain management and flood insurance side use quite a bit. Flood insurance rate maps and flood insurance studies can be downloaded free of charge from FEMA's MAP Service Center. The website is there. My understanding is that this session will be included on a YouTube link, so you'll be able to have access to this page and see what these websites are. There's also many FEMA publications available from www.fema.gov. In particular, what are helpful to on our floodplain management side for all of us that work a little more in floodplain management are the National Flood Insurance Program technical bulletins. These really help with that gray area that Mitch talked about. So these are topic-specific bulletins that give more detail and more explanatory material on how to meet some of the floodplain management requirements for different situations. Just off the top of my head, this could be construction on crawl spaces, construction with openings and ventings, floodproofing, among other topics. For flood insurance, we have www.floodsmart.gov. This is our primary marketing site for flood insurance, and it's a great site for residents, individuals, flood insurance agents, really anyone to go to get more information about flood insurance. There's a lot of great fact sheets. There's also a tool, an addressing tool. You can put your address in and it'll pop up if the address is in or near a special flood hazard area. Also, I do want to point, since we have the nationwide audience, I do want to point everyone in the direction of their local, state, and federal floodplain management staff. As Mitch mentioned, every community that participates in the National Flood Insurance Program has assigned some office or person in the community to be the floodplain administrator. I've seen it can be a wide variety. There are some, the larger communities will tend to have like an actual floodplain office with several staff members. Other, it might be a village clerk. It could be a highway superintendent. Sometimes it's the mayor of the community. It varies widely, and so I just recommend, if you're looking for the floodplain administrator, contact your state or federal floodplain management staff and they can get you in touch with the right person. Also on the state side, every state has a National Flood Insurance Program coordinator. Again, it will vary state to state, like how big that office is, but there should be an NFIP coordinator for each state. And then moving to the federal level, every FEMA regional office has a floodplain management and insurance branch within the mitigation division. And if they're similar to FEMA Region 7, we have state liaisons. So we have a person assigned to dedicate their time to the different states in that particular FEMA region. So I think that's all I have for the flood insurance portion. I'll be happy to, and I know Mitch will too, to entertain any questions.
Great. We have several questions from the audience. First one is asking, what do you do when previous floodplain permits are in your files but haven't been signed by the local municipalities?
I'll take this. Is Shandy. I'll take this one. This is an interesting question, and typically all the floodplain development permitting is done through the local community. So we should, at the federal and state level, everything should have gone through the community first. And if by chance we would get something, like if I get something in my office, like some kind of permitting document, my immediate first call is to the community to find out more about what's going on. I'll also get calls from individuals asking what FEMA's permitting requirements are, and I automatically send them to whatever jurisdiction they're developing in. I send them to the local floodplain administrator to hopefully keep a lot of that from happening.
Great. Next question. Is there a time limit on challenging the flood maps as they affect particular properties or areas?
Another great question. Typically when I'll say yes is the short answer, and now for the long answer. When a new flood insurance rate map is pushed out, there's a whole regulatory process that is followed. What's called a preliminary flood insurance rate map is published for a community, and typically you'll see we'll see a community meeting where there's FEMA, state, local people at. A lot of times public open houses will follow along as well, and there is, at that point, there's what's called an appeal period that opens up, and an appeal period, it's a 90-day period where anyone in the community can submit through their community any kind of, if they're contesting the map, or if they have scientific and technical information that would refute what's on the preliminary firm, they can submit that to FEMA, and FEMA will review it and determine whether or not to incorporate it. Now, this is the point where we get a lot of questions regarding what exactly is an appeal. And so we have individuals who will say, well, I have an elevation certificate, and it says that my house is above this base flood elevation that's on the preliminary map. because of the scaling of our maps, we are unable to put circles around each and every property that might be removed. So what we do is we talk to those people about that LOMA process, that letter of map amendment or letter of map revision based on fill, since those are more for those individual or small grouping of homes and lots. So, I hope that answers your question.
So this question is very similar. How would you advise someone who is deciding between seeking a LOMA to build a house or submitting a floodplain development permit and building in the SFHA?
I'm sorry, can you repeat that question?
I apologize. How would you advise someone who's deciding between either seeking a LOMA to build a house or submitting a floodplain development permit and building in the SFHA?
Well, I think what I would do is advise this person that if the property they're looking at is out of the floodplain, I would advise them why not get a LOMA from FEMA to remove the property from the floodplain from the flood zone. I still would advise them to talk with their local floodplain administrator to make sure that even though their structure that they might want to build will be out of the floodplain, but to make sure that everything that they're doing is consistent with the locally adopted floodplain management and other building ordinances that would be in effect. And then I would advise that person that if they're successful with their LOMA and removing the structure from the floodplain, to still purchase flood insurance because, again, Mother Nature doesn't always follow our maps, and flood insurance for a property that's outside of the high-risk floodplain is pretty inexpensive. It's a few $100s a year. So I would still recommend that person buy flood insurance and use that LOMA as proof that they are outside of the that they are higher than the special flood hazard area flood elevation.
Great. The next question comes from the city of Santa Cruz, California. From Santa Cruz, they have a number of residents receive private placement flood insurance, which generally has premiums 50% less than NFIP. Do you have any experience with this private placement insurance?
I personally do not have any experience with that private insurance. I have heard quite a bit about it just when I'm out in the communities and people are asking me. I can't really talk a whole lot about what's being offered or that product itself because it's not a FEMA or a National Flood Insurance Program product. However, what we do recommend to people is that they make sure that they read the fine print and make sure that they're getting the coverages that they're looking for. And a big difference that there could be is that the National Flood Insurance Program flood insurance it's often capped. Any increases that happen from year to year are going to be capped at a certain percentage amount. These other private insurers, they may not have any kind of limitations like that on them. So while people may see these really low rates now, they may not be very predictable for the future in maintaining that. So we just recommend people really, buyer beware and really look at the product that they're buying to make sure that it's really intending to save them the money that they're hoping it will, in the long term, that they're saving in the short term.
And we get a lot of questions in Nebraska from communities about that too, and we typically tell them the same thing. Some communities take that a step further and ask, well, if it's better for private insurance, why don't we just get out of the flood insurance program and just have everyone buy private insurance? And we always tell them not to do that because if that private insurance becomes unavailable in the future, that homeowner or business owner that needs a federally backed mortgage still needs to get flood insurance if they're in a floodplain. And having a community participate is the crucial piece in that. So that's what we typically tell them.
That's a great point. Thank you, Mitch.
Our next question asks about coastal areas. In these areas, to what extent do the flood maps take into account the effect of future sea level rise?
This is Shandy again, and unfortunately, I don't have a lot of experience on the coastal areas. However, I did see on the Technical Mapping Advisory Council on their latest agenda for their in-person meeting that one of their topics actually was climate change. So as much as like higher sea level would interplays with that climate change, I think there is very, very much an interest to take that into account. I don't really know where that's going in the future specifically.
And I might, Shandy, and correct me if I'm wrong. Again, I'm not an engineer, but I think sometimes I get this question from communities occasionally about, well, we've heard about climate change, and do our flood maps, reflect the change in the next 50 years? And I think when flood maps are produced, they typically use engineering methods that take measurements of record, in the past, and then apply that to the map as it exists when it comes out. So the FEMA models for engineering don't require a community or a state to do any sort of predictive, here's what we think the additional precipitation will be, right?
Right, and Mitch is correct. There's, to my knowledge, unless something has changed recently, the mapping guidelines and standards do not have any kind of requirement for predictability, so to speak. However, I know that there are areas across the country and communities that will do like future growth type situations, or they might do a future conditions modeling to include in their set of flood risk information.
Great. The next question comes from an attendee who has been watching out for new maps that could be coming out. When do you anticipate the new maps will be coming out? As you know, there are always questions about their accuracy.
Well, there's lots of different mapping projects going on across the nation, so I would encourage the participant that asked that question to work with the floodplain manager and the state floodplain management office and their FEMA region to learn any kind of schedule and current mapping projects that are going on within that particular area of the country.
Our next question is a follow-up to the private flood insurance question. In order to get a federally backed mortgage, can you have private flood insurance, or do you have to have insurance from NFIP?
Oh, great question, and we hear this quite a bit too. The federally backed mortgage and mandatory flood insurance purchase requirement, the flood insurance does not have to come from the NFIP. It can come from a private insurance carrier. However, the rule about it is that basically the private flood insurance must have coverages that are equivalent to the National Flood Insurance Program flood insurance coverage.
On a related note, how do you get FEMA flood insurance? Through local insurance agencies or directly from FEMA?
There's lots of ways that people can buy flood insurance. FEMA contracts with numerous write-your-own flood insurance companies, and so a lot of times folks will go to the local insurance agent in their community and purchase flood insurance. If flood insurance is not available from that, or that person or that particular insurance office has chosen not to sell flood insurance, you can buy flood insurance from the National Flood Insurance Program direct as well. And on that www.floodsmart.gov, a person can go to that site, and there's a find an agent search tool, and they can put in their zip code, and it'll pop up all the agents in that area that sell flood insurance.
Great. The next question is a hypothetical. If part of the property is in the 100-year floodplain, but the location of the single-family residence is not in that area, will that residence require a elevation certificate if they have a basement to show that it's out of the floodplain?
Well, what I would recommend here is, and this is a great hypothetical question, so just want to reiterate to make sure I understand it correctly, is we're looking at a lot, and part of the lot is in the high-risk floodplain, or in the special flood hazard area, but the structure that's on the lot is actually outside. What I usually recommend folks here to do here is that there is a LOMA process. It's a letter of map amendment process to remove the structure from the floodplain, and it could be removed based on elevation, it sounds like, or perhaps just because it's geographically located outside of the special flood hazard area, and if it's very, very obvious, it can be called out in that respect as well. And I do want to expand on this one a little bit because if there's a federally insured mortgage on this structure, because part of the lot is in the floodplain, there's a good likelihood that the lender will require flood insurance anyway, just because of how the flood determinations work, and the special flood hazard area intersects the lot that the structure's on. And so this is a good case too, where we would recommend the structure owner to go through the LOMA process as well, because that way they'll have a document in hand proving that they're outside of the floodplain and can provide that to their lender. And then access the cheaper insurance too.
Great. Here's another hypothetical. Take a home that receives lower rate increases under HFIAA. If that home is sold, does the new owner benefit from the same lower rate, or do they now have to pay full price?
That's a really good question, and I noticed it specifically was a home, so we're looking at a residential structure. So BW-12, that was the Biggert-Waters 2012 Act, and also I'm going to put the caveat on here, that's a pre-firm structure, so it receives a subsidy. Under BW-12, that subsidy would have been removed because the structure would have been sold, and that was what was called a trigger action under BW-12. However, good news for that residential property owner is that under HFIAA, those residential triggers were removed so that a pre-firm homeowner that's receiving a lower premium can now pass that lower premium to the person that they're selling the home to.
Great. The next question is about Mitch's presentation. Do you mind repeating what you said about what happens in a disaster when a structure is not in compliance but gets damaged?
I think this question is referring to the requirements of floodplain management for a substantially damaged structure. And I'm going to answer it that way. If I didn't answer that person's question, let me know. But regardless of what kind of damage causes damage to a structure, whether it's fire, a tornado, flooding, whatever it is, or just neglect, really, if it's damaged to 50% or more of the pre-damage value, then if that property is located in a floodplain, then they have to come into compliance with the floodplain management standards. So if, for example, a building is below the BFE by 3 feet and there's a fire that damages the structure by 75%, then if they want to rebuild that structure, they'll have to go through the process with the floodplain development permit and elevate that structure to above the base flood elevation at whatever the local requirements are. We just, in Nebraska, we were hit hard this summer by tornadoes, and we had a community that's located almost entirely in the floodplain that got hit very, very hard by a tornado and damaged probably more than 50% of the structures, and a lot of them had to come into compliance with the floodplain management because the structures were pre-firm, and they're allowed to be below the base flood elevation because they're grandfathered in. And a lot of homeowners had to go through the, or going to have to go through the process of elevating their homes. But at the end of the day, that makes them safer, and that's sort of used as an opportunity if they're going to have to rebuild their house anyways, you know, to make it safe from tornadoes and make it safe from flooding at the same time.
Great, thank you. Our final question today is asking about the maximum coverage of flood insurance. Is it possible to get flood insurance coverage for more than $250,000?
Well, for a residential structure, we are capped at $250,000 for the residential and $500,000 for the non-residential. So unless something were to change with the program, that's pretty much all people can get through the National Flood Insurance Program. Above and beyond that, there may be some extra insurance that people can purchase. Again, I'm getting into an area that I don't know a whole lot about on that extra insurance side. But as far as the NFIP is concerned, yes, we are capped at the $250,000 for residentials.